It's about that time of day again. My name is Joseph. Monday evening, August 13th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities I see setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bearish with a spike and range pattern. That tells me to look for selling opportunities using buyer failures off the highs. But a strong recent move reminds me I've got to wait for a successful two-try rule before I can sell back down to those lows tomorrow morning. The S&P is also bearish and range bound this evening, so my plan is to look for selling opportunities up above the highs of that range using those buyer failure patterns tomorrow. Nasdaq's also range bound with a triangle this evening, and that tells me to look for the most reliable trading opportunities using the swings around the edges of that triangle tomorrow. We'll grab a look at that Nasdaq in a moment. Gold is bearish with a strong spike and channel pattern tonight, and that tells me to look for selling opportunities, but instead of the lows, up at the highs of that channel tomorrow. And don't forget about the euro. The euro's bearish with a spike and channel, and that spike and channels quickly turn sideways into a range. So the plan is simple. Look for buyer failures above those range highs to sell back down to those range lows tomorrow morning. Well, we're back after a short break from the action here on a Monday evening, ready for another big week of profitable trading opportunities on this nightly newsletter. And as you can see, we get a lot of ranges on the chart tonight, so we're watching for those two-try rules and those failure patterns going into tomorrow's session. Before we jump into charts tonight, though, and put the plan together for Tuesday's session, I need to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire trading strategy written out right here on my blog at sidewaysmarkets.com. Also, if you have any questions about anything covered in tonight's lesson, please remember to post those questions in the comments section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over here to the blog at Sideways Markets. This is where all the action happens every day, and make sure you join our mailing list. That's right, give me your name and your email address and I'll shoot you an email every time I publish something new. If you're hanging out on social media, StockTwits, Twitter, Facebook, LinkedIn, you can find all my channels in the lower left-hand corner of the website. And don't forget about charts from tonight's video. How easy is this? All the charts from tonight's video, get them ready on your computer for tomorrow. Download all those charts, follow that link below the video. And then don't forget, upper right-hand corner, if you're not a member here at School of Trade and you'd like to come out and join the trade room as a guest and get a deeper dive and see how this strategy works, grab that free pass in the upper right-hand corner, and I'll see you tomorrow. And if you have any questions, you can always post those questions in the comments section, call the toll-free number on our website, or you can always hit me up on live support on the right-hand side of our web pages. All right, hope you guys had a great summertime weekend. We only get so many of them, right? Boy, I'll tell you, kids are going back to school here in Los Angeles. I heard teachers report back today or tomorrow, and then kids going back to school. I can't even believe it. We're talking about the third week of August here, right in front of our noses. Boy, that time just flies right by. We're looking forward to this. The kids may not be looking forward to this, but we know, though, historically, once the kids go back to school, everything seems to come back together again, and the markets are back to their perky selves again. So a little bit slower during summertime season. The windows of opportunity are a little bit smaller during the summertime season, right? And, of course, right, we have to kind of adjust accordingly. Maybe not adjust, but just be more realistic with our expectations during the months of July and August. But boy, oh boy, we are knocking on fall's door right now, right? The fall season, you got September, October, November, December, January, February, March. Those are the best months of the year. So now is a great time to really buckle down, learn to use your charts, learn to find the patterns. And of course, don't forget, we're going to do this every day in our trade room with all of our advanced members. Before I jump in though, don't forget tomorrow, Tuesday, August the 14th. What do we have here on the schedule for tomorrow? Nada, not much as you can see here. There's not a lot to worry about tomorrow overall. All the good stuff is piled in on Wednesday and Thursday. So tomorrow is going to be one of those wide open days where, it'll be the twittering, right? It'll be the headlines, it'll be the political stuff, right? It'll be the dollar, it'll be a lot of the trade war back and forth. I'm sure there'll be some headlines that will catch our attention tomorrow morning. Other than that, though, there's no major news on the schedule for tomorrow. Knowing that, let's jump into our charts. And again, don't forget, 8 o'clock Eastern time, we're going to be breaking this strategy down with all of our clients tomorrow in the trade room. I got crude oil up first, then over to the E-mini. We'll go to the E-mini S&P, then the Nasdaq, and then we'll grab the gold. And of course, we can't forget about that mighty euro. Starting off tonight with oil, crude is bearish with a spike in range pattern, a pendulum swing, a hidden channel, and a strong bull run on the chart this evening. The bear spike in range is the big clue. Bear spike down, right? Bear spike in range. Bear spike in range is the big clue. That tells me to look for selling opportunities using the 2-try rule and buyer failures up above the highs of that range tomorrow morning. But wait a second, the strength of this move, look at that strength, right, coming off that pendulum swing. Beautiful example of that trading range, right? The amount of the move above is just about the amount of the move below, right? We call this the pendulum swing, overshoot, undershoot. You'll learn about that in our intermediate classes here at School of Trade. Great clues there, right? Selling off the high, target down at that low. But boy, oh boy, as we come off that pendulum swing, look at the strength, right, of this move. It's such a strong move, it's hard to imagine trying to sell this market until the momentum shifts back in our favor, right? That tells me, of course, to wait for the buyers to try twice using the 2-try rule, and then we can look for selling opportunities once we turn back down again, preferably right below the moving average. Right? Anytime we see a strong move in one direction, we're expecting to see another attempt, right, to go higher, just like they did here, right? Strong move up, pulls back, they try again, then we roll over. That will be similar we're looking for here tomorrow. And then I also want, we're not really close to it right now, but I do want you guys to recall it's that time of the month again. The 18th of the month is this Saturday. That means later on this week, we are going to be looking at rollover. Rollover could be as early as Wednesday. I've seen it. Usually rollover finds a way to kind of move in around Wednesdays. So I could see oil rollover as early as Wednesday this week, as late as next Monday. In all reality, probably going to be Wednesday, Thursday, or Friday this week. I will keep you guys posted. We'll talk more about that as we get closer. So keep an eye on the volume. So looking at oil, strong bear market down. I definitely want to be a seller. The problem right now, though, is, again, this strength, right? That strength is way too strong right now to start to sell that market. So what I'm going to do is I'm going to take a little page, right, out of the book we saw back here. And that is, I want to kind of pinpoint this down here. Again, we have this trading range. You want to sell off the high of that range. They go up, they come down, we go back up. We should end up back down to that range low. Now, again, we saw a strong move higher here, right? This, of course, goes back to last Friday, right? This strong move higher, because it's so strong, you're going to have a hard time just selling a failure pattern, right, back down. So what you want to do is you want to wait for that 1-try, 2-try, and then wait for the move down and then sell the turn from there, right? So strong move up, 1-try, pull back, 2 tries. The pullback should be the moving average, right? That's the only way to qualify a 2-try rule. And then from there, I want to see this 1-try, 2-try, and again, kind of look at what happened over here, right? Moving average comes over, we get that run back down, and I'm looking for sells right off the top of this range tomorrow morning. Pretty easy strategy, right? Pretty easy strategy. And again, the range tells me location. The strong move higher here tells me let's not be too aggressive on this, right? Let's not be too aggressive, because in all reality, this market could reverse. Now, what would a reversal look like here for the bulls? A reversal here would look like this. It would basically be a strong move up, a pullback, and then a continuation, right? See, if we would have seen strength at the end of the day on Friday there, that would have been a reversal. Strong move up, pull back to the moving average, right? Always got to pull back to the moving average. If it doesn't pull back to the moving average, it doesn't count as a pullback in my book, right? It's basically still one big leg. I want to see a strong move through. I want this move higher here to be so strong that it's no question that the fact that sellers who control this market right now are bailing on this, right? That's the personality. What I always describe it as is that move higher is going to make you want to lean over your keyboard. You know what I'm talking about, right? When the markets are going slowly, you get your feet up on your desk, you're leaning back in your chair. When I see that second move higher, right, this is the lean in, right? It's going to cause most people to go, ooh, what is that, right? That type of boom, right? That big explosive move, that's what you're looking for, right, as we go higher. Explosiveness, right? We always talk about that 1, 2, 3 reversal, right? And that reversal has that explosiveness, right, at the tail end of that move. Now, what do we do up there? Do we buy up here? No, definitely not, right? That explosiveness now tells me the buyers have control. I'm now looking for a new channel. I'm going to mark up these highs. That will give me a trend line off of that low. And these are pretty reliable. I'm going to look for that pullback, right? Pullback, trap pattern, failure pattern, right? Using, again, that hidden channel, right? So, again, a couple things here. Trading range, right? Pendulum swing. Strong move up says 1 try, 2 try. Sell, right? Sell the turn, right? Back down in. 1 try, 2 try, explosive move higher. We call it a 1, 2, 3 reversal. Don't chase after it. Buy the hidden channel right off of that low. Wow, a lot covered, right? I mean, how many different things did we talk about there in the last, right, 5 or 6 minutes? If you're here for the first time today, I want to slow down for a second and give you a chance to catch up with all the terminology and all the patterns. I'm going to keep going through the rest of these markets, right? But I want to make sure that I give you that deeper dive into all the terms, all the technical analysis, and most importantly, right, all the entry patterns. And to do that, in the upper right-hand corner, I'm going to put a free trading course up here. That free trading course will show you, right, how to transform from an ordinary person into an extraordinary trader. And of course, I help our clients do that every day in our trade room. But that, right, that free trading course, I'll put the link, right, down bottom here. I'll put the link down bottom inside the description as well. Grab that free class. If you have any questions about that, call my office, hit me up on live support, email jj@schooloftrade.com, whatever the question may be. I want to make sure I help you guys out. So grab that free course. In the meantime, let's keep going, right? I don't have time to dive too deep into each one here, right? But that free course will give you a whole lot more details here. Let's keep going. How about some S&P? S&P is bearish as well. This time of the channel, a trading range, a pendulum swing, and a measured move on the chart this evening. The channel tells me the bears have the momentum on their side, and I should focus on selling high at resistance levels. However, the trading range now, those double bottoms down around 28.20, right? Channel tells me we're bearish right now, right? Sell nice and high, right? But then we see this. We see double bottoms in a bear market. Anytime I see double bottoms in a bear market, that tells me now we're going sideways, right? And of course, that trading range tells me, right? That trading range now tells me with the bears having momentum at their side, I want to sell using what I call the 2-try rule. 1 try, 2 try, failure, strength, pullback, back in. I want to use that 2-try rule, right, to sell back down to those lows tomorrow morning. So again, bear bias going lower. I want to be a seller, right? You can see bears were eager, right, to sell as this market popped higher here, right, early this morning into the U.S. session. Got a big, strong move down, but look what they didn't do. They didn't get anything accomplished down here. They went back down to retest the low. That's where every target is in a bear market. And the record skips, right? All of a sudden now, whoa, nobody wants to sell down here, right? Nobody's selling down. You can see they're all stopping in their tracks down here. So that's a big, big clue. Whenever I see a bear market double bottom like this, I know it turns into a trading range. Now, the range in this example, there's a couple different options that I chose for a range. First of all, the range could be here, right? That in all reality could be the range. You can see that kind of came back there. The range, I think the best fit's probably going to be around here. Use that gap right over the weekend. That's probably the range somewhere there. And I doubt it, but this could be the range too. It could be a much bigger range. I don't think that big range, though, is going to be the best fit because typically when it comes to ranges, the narrower the better. So it's either going to be this is the range, right, or it's going to be this is the range, at least from what I can tell so far. We'll know more as we get more candlesticks. Again, bear market. Trading range, sell the high of that, right? Sell the high of that trading range. How do we sell the high of that trading range? Good example right here. We go up above the moving average. Buyers try to buy the pullback to the moving average. When they buy that pullback, where are their stops? Bingo, right? Sell into those stops. Then don't chase after it. Sell the pullback from there, right? We call this the one try, two try. Sell into those stops, called a failure pattern. Failure into strength. Don't chase after strength. Wait for the pullback. I like to go out and grab a little channel like this, right? And look for that sell. Bam, back down again. So here you've got your two try failure. Find that new hidden channel, right? Find the new hidden channel, and then bingo, sell off that high. And again, if you want to learn the specific entry patterns that I'll use in that type of scenario, up top, free trading course, down bottom, free trading course. Grab the information out of the upper right, or below the description. You'll be happy you did. Again, I can't go into too much detail because of the short time we have together here tonight, but that free course will give you the deep dive. Now, as I mentioned earlier, right, one try, two try, failure, strength. Find that new channel, pull back and back down, right? You're selling those highs. What if we keep going lower here tomorrow, right? What if we keep going lower? Can I do the same thing tomorrow, right? Can I go, can I do the same thing to the buy side? One try, two try. Can I go failure right there? You can, but the problem is you wind up getting situations like this, right? Where you've got a one try, two try, failure, but look what happens. Sellers, they're waiting to sell up here. The trend is bearish. Momentum is bearish. So I'd rather go one try, two try, failure, strength, channel, pull back, and back down. I'd rather do it that way, right? But I want to be a buyer here. What would work? What would be the best way to do it? You've got to give yourself a little bit more of an edge. One try, two try. Instead of that failure now, wait for the failure. Let them take it higher. Then grab that new high up to that low. Aha, now we're talking. Use that prior swing as support, and now we're buying around the low of that range. The key is when it comes to a range, buy low, sell high, but you want to stay away from that middle and really, really be patient to find those buy patterns as close to those lows as possible, right? So stay out of that middle, up and back down, down and back up. But remember, don't chase, pullbacks, right? Or buy those pullbacks. That's right. That's going to be the much more reliable way to do this. Question, how do we break out of a range? What does a range breakout look like? Remember how we talked about that strength, pullback, strength, that strong explosive reversal? Same thing. For me to get a breakout, I need to see, for example, this break higher here earlier. If those buyers would have just held that pullback and run, again, explosive move, right? It's so explosive that it makes you lean into your desk, right? It's one of those explosive moves that basically tells us the sellers in this example are giving up on this market, right? They're cashing in their chips, they're leaving the table, right? They're finishing their cocktail and they're done, right? That's the type of move you're looking for, right? So you want to see that pullback, find that new high, find that new low. Again, you're buying off that low, measured move target, channel target. And again, I know I'm covering a lot right now, so grab that free trading course if you want a deeper dive. Let's keep rolling, right? Let's keep blowing. Buy low, sell high, avoid that middle. Oh, you don't say. You don't say buy low, sell high, avoid the middle. Yeah, the Nasdaq, I think, will agree with us on that. Nasdaq is bearish, just a little bit bearish right now. You can see that thing coming down off those highs. So just a slight bearish tone to it. Trading range, triangle, and measured move on the chart this evening. Now, the trading range, as I mentioned before, trading range is a big clue. It's a big deal. It basically tells me the market's balanced and we're going to rotate from high to low to low to high. And I want to buy low, I want to sell high, and I want to avoid the middle. Now, the lower highs and higher lows give me this triangle, right? So looking at the chart right now, higher lows, lower highs, that's a triangle. Now, a triangle may not seem like a very important piece of the puzzle, but I'll tell you it will, right? Triangles tell me to focus on the edges. This is where triangles really help out because they give me a lot more specifics, right? They tell me exactly where to be looking for those buys, right, and those sells. So the triangle, very, very important, right, in combination with that trading range. Anytime I have a range-bound market, my plan is always to buy low, sell high, two-try rule, right, failure patterns at the highs, and those lows, right? So here we are. We want to stay away from that middle here in the Nasdaq. We've got this momentum swinging lower, right? Got this momentum swinging lower. So in all reality, you could look at this as just kind of a standalone spike in range, right? You really could. But you'll notice when I zoom out, this really all goes back to last Friday's session. It really does. It all goes back to last Friday's session, which basically was its own spike in range. Look at how well this range, though, has held up so far. That was the range from last Friday's trading session. Take the size of that range, copy and paste it down, copy and paste it down. Look at how reliable those support levels were below. And look above, right? It goes almost all the way back now. The amount of the move lower, the amount of the move higher, I mean, they're almost identical. So this range, if you haven't learned how, or if you've never been introduced to the power of these trading ranges, boy, do they have a self-fulfilling prophecy, right? They're very self-fulfilling nature to them. People, once they pick up on them, they use those ranges, right? That's why I always say, once you find a range, everything's going to revolve around that range, right? It's the most important thing. And also, too, a tip, anytime you find a range-bound market, large channels are always going to be suspicious, right? I talk a lot about channels on this newsletter, and we use channels a lot in our trade room. But anytime you see a range, the range is the most important clue. Everything else, right, is secondary. So trend line's coming down, trend line's coming up, right? Keep my eyes on the prize around these swings, right? 1 and 2. And again, remember, two-try rule. Bear bias. So I'm going to go 1 try, 2 try, failure back down. Don't chase it here, right? It's a failure pattern into a not chasing after it, into a pullback pattern, right? Those will be the two most reliable patterns. And again, look closely at where I'm drawing these, right? One is the failure, basically selling into stops of those buyers, right? Buyers try once, they buy the pullback, right? Their stops sitting below, we're selling into those stops, right? You're selling those stops. Good example was back here, right? Strong move down, bears to sell it, right? You're buying into those stops, right? That's the idea, right? Off of that low. Again, you're selling off the high. I'm not chasing after it. Use that hidden channel, sell off that high. Perfect, right? That's the most reliable strategy up around the highs of that, right? Of that channel. Now, as we go lower here, I'm really watching this pendulum swing, right? So if we end up running lower right now, it kind of all depends on the type of move. If this thing does another one of these nosedives, right? If we go straight down, right? If we just see red candle, red candle, red candle, right? If I see that, okay, now I can't just go 1 try, 2 try, failure back up, right? I can't buy that failure because it's just too aggressive. So what I'll do is, and again, this is where you get us going to wait and see what we get here. If we get that, right? If we do get that strong move down and I don't want to take that failure, then I mark up those highs up to that low, and you guessed it, we're looking to buy that pullback, right? That pullback coming off of that low. I think that's going to be a great trade as well. A lot more reliable buying off that trend line than buying the failure. Just again, because, right, like you saw right here, right, 1 try, 2 try, You see what happened? You try to buy a failure there. Sellers are waiting, right? They're going to come in and sell right into your entry there. So you don't want to go against that momentum, right, of that market. So pretty easy job in the Nasdaq. One try, two try, failure, strength, pull back down in. One try, two try. Watch the personality of this. Failure, strength, pull back in. And again, I've got literally probably at this point 1,000 or so examples of this pattern, right, in my free trading course. So grab that free course. It's in the description, right? It's in the upper right hand corner. You'll see a lot more examples there. Now, with that said, how do we break out of a range? How do we break out of a range? Well, here's a good example. Do not assume that a strong move is enough to break out of a range. Make them hold the pullback. Look what happened to that move higher, right? I mean, certainly you would look at this and go, there's no way, right? This range is still intact. Sure enough, right back into the range. So don't let a strong move spook you, right? It's got to go strength, pull back to what? Pull back to the moving average. If it doesn't pull back to the moving average, it doesn't count. Then a strong move, again, explosive, exclamation point at the end of it, right? Big strong move higher, that tells me everybody's getting out of their positions. We can now rely on a new trend, new channel. I'm buying off of that low. All right, guys, really, really good chart there on the Nasdaq and excited for tomorrow's trading session. All right. Enough of the ranges. Well, maybe not completely enough of the ranges. We got one range on here, but let's transition now into more of a trending environment. Gold. Gold is bearish. Strong move lower. Spiking channel and a hidden channel on the chart this evening. Well, I'll tell you right now, if there's a concern out there about the global economy, the trade war, it ain't showing up on gold right now. Historically, gold is the market that is the one that starts to flutter higher, right, when things are good. Right now, if you listen to the news media, it sounds like everything's horrible out there. I wonder why, right? Apparently, the news media knows that what sells advertising is fear, right? But look at the gold, right? Gold is painting a very rosy picture right now. We're back down to that really comfortable number at 1,200. Now, kids, if you're here for the first year or so right now, you probably haven't seen this number very much. We've spent a lot of our time last year around 1,300. But 1,200 historically, 1,200 then down to 1,000. 1,000 is a big round number, obviously. 1,200 is a very it's almost like a psychological teddy bear. You know, it's like everybody kind of goes, oh, 1,200. Everything's cool. Everything's fine, right? So obviously this could change in a heartbeat. But very, very interesting, though, when you look at, the real fear factor of the market, real fear, marker, gold. It's obviously not telling us things can't be that bad out there, right? All the news media definitely wants to think so. So we have a strong move lower, spiking channel, a hidden channel. First, strong move lower. What does a strong move lower always tell me? A strong move lower tells me look for a two-legged pullback and a retest of that low. Now, once we get to that retest of the low, what do we look for from there? This is going to tell me if you guys are really OG newsletter guys and gals here, because I haven't talked about this in a while. If you're a veteran on my newsletter, once we retest that low, we look for what? We look for acceptance or rejection. Right? Now, rejection would be a move down, a pull back, and a double bottom, right? That'd be rejection. That will tell you double bottom, just like on the S&P, just like on the crude, right? We've talked about this already a few times. Double bottoms in a bear market, give me a trading range. Well, what happens if we go through that low? Well, now we start looking at this as a spike in channel, or possibly a spike in wedge. In all reality, if you draw that trend line down, wedges are not nearly as common as spike in channels, but we'll keep an eye out for it right tomorrow as well. Strong move lower tells me that sellers are well in control. Momentum is at their back. The wind is at their back, and I want to sell, right? Where do I want to sell? I want to sell high. What's my definition of high? Up at resistance. In this example, in this scenario, it'll be up at the high, right, of that spiking channel, right? Spiking channel tells me sell up around that high. I should also mention, too, that anytime we see that strong move down into that lower low and we draw that spike in channel, there are really three places you're looking for sells. One, at the high of that channel. Two is going to be at prior swings above that high, right? Makes sense? And then three, if things get really crazy, at the base of that channel. See where I'm drawing that, right? At the base of that channel. What's the base? The base would be, right, where that trend line intersects with the strong move down, right? So the base of the channel, prior swings, and the high of that channel, right? So high of the channel, selling. Prior swing, selling. Base of the channel, right, selling. And as you can imagine, I can be a lot more aggressive with my pullback pattern off the high of the channel. I'll look for a failure pattern off that swing, right? But if we really make a run for it, right? If we really make a run up to the base, that momentum will be so strong. Instead of the failure pattern, it's the pullback pattern instead. I hope you guys can see how this is kind of all coming together on this, right? Momentum tells me whether or not I can sell that failure. If we see this real strong move higher to the base of that channel again, I'm not going to sell that failure, right? I know it's bearish, but it's just the momentum's too strong to the upside. It's going to be too difficult to use a small stop. Let's put it that way, right? The odds aren't quite there enough. Wait for that collapse back down now. Oh, now the odds shift heavily in our favor. It's the difference between a 40-60 trade and a 60-40 trade. Can you tell the difference between a 40-60 and a 60-40? That little small difference, right, is the difference between you making money and losing money. Once you account for slippage, once you pay your broker, right, once you call in sick, right, and once a couple days go awry, that difference between 40-60 and 60-40 is going to be the difference between potentially millions of dollars, right, in a long-term trading career. Can you tell the difference between a 40-60 and a 60-40? This is a good example right there, right? It all depends on momentum. We'll talk more about that tomorrow, right, in our trade room. Okay, so we know we have that bear spiking channel. I want to sell high. I can sell the high of the channel, right? I can sell the swing, right? Or if we go all the way up, right, there's the base of that channel. Ooh, wait a second. If I take these two lows and I bring it up top of these highs, see how this kind of makes for a midline here, right? See how this in the middle, that's kind of the halfway point? Yeah, so we know that's a potential for tomorrow, but really all we know right now is channel, right? Bear market channel. So if I go higher here, I'm going to be above the moving average. Above the moving average means, look left, right there. Above the moving average means buyers will try to buy that pullback. And we can then, because the momentum isn't that strong for the bulls yet, we can sell that failure. That failure, of course, brings us down, new channel, right? Selling off that high. So as you can see, you can find a couple different opportunities here, whether it be a two-try failure, right, or a bear channel going lower. All right. Now, what if we go higher here, right? If we really run, right, we run up into that prior swing, up into that base, into that trend line now. Now we're going to be bullish, right? We'll be way too bullish for us just to blindly sell it. Okay. So now what we got to do is we got to play the game, right? Wait for those buyers now to tire themselves out here. Strong move down. Yeah. Don't chase after it though, right? Don't chase after that, because you chase after that, who's down here? Buyers are down here, right? Think about that. Why don't, the biggest reason, and you may not have heard someone think of it this way, why don't you sell down here? It could keep going, you're right, it could keep going. But think about it, at that point, the market's been so bullish at that point. What is this area, right? Think about this. A lot of buyers are doing what? Oh, they're going to buy that, right? That 50 to 61, right? I'm not saying that's a good idea on this. I'm just saying that's probably going to be where some bulls are hanging out. So when you try to sell down here, and believe me, guys, I'm not saying this is easy, right? When I was a new trader, it was almost like clockwork, right? I would chase trades every day. It's just, as a human being, it's almost impossible to resist the temptation to chase after a moving market. Believe me, I know it's not easy, right? But that's why we get paid so well as traders. If you can curb your enthusiasm, right, for chasing after the market, in other words, if you can think like a trader instead of letting your emotions and your instincts trade for you. Instincts are great for everything else in life, but not day trading. We know that, right? Right? If we can control our instincts a little bit, I know it's difficult, but try not to chase after that market to go lower. Now we got buyers buying there now, right? Now I can take that new channel, and guess what? Now when I sell, I'm now selling into those stop losses. I'm selling into buyers failing. That's a great, great opportunity. All right, guys? I know. I would much rather sell up here. Believe me, right? Everyone wants to make more money. But if we get that big move higher, though, that momentum is going to be so bullish at that point, it's going to be really difficult to pick a top, right? So wait for that turn. That'll be a whole lot easier. It'll be less stress, right? And it'll be a lot higher reliability. Now, what if we keep going lower here? Right? This gold's really been on a bit of a bear tone here, hasn't it, right? What if we keep going lower? What if we keep grinding this sucker lower? At this point now, the plan does not change. I'm still waiting here now to sell high. And now I'm going to go out, find those swings, and look to sell. Same patterns. Again, 2-try rule, failure pattern, strength, pull back off that new channel, right? And again, if you want to learn more of those patterns, see more examples of them, right? Upper right-hand corner, grab that free course or go in the description and register with the link in the description, right? So that's where we look to sell if we go higher here. Now, what if we go sideways? Could easily happen, right? Could easily happen, right? Double bottom in a bear market. We see double bottoms here tomorrow. Now, we got a trading range. What do we do with the trading range? We go 1 try. We go 2 try. Failure back down. Let those buyers try once. Let them try twice and then sell right into those stops. Then what? Then what do we do? Well, then I try to get that strong move down. Let's do this. Trading range. Right? 1 try, 2 try, sell back down. Then get the moving average through, use the underbelly of that range as resistance, and then very important, pay attention, 2-legged pullback, and we can sell off of that high, right? I don't trade breakouts. I fade the breakouts. If we're going with that trend, it's got to be really strong, right? Really, really strong as we break below that range tomorrow. And then last but not least, how do we reverse? What does a reversal look like here on the gold? A reversal will be a strength, right? Strong move up. It'll look very strong, right? Very strong. Pull back to the moving average, and then strength move through, right? Strength, pull back, strength. A 1, 2, 3 reversal, right? And again, I put an exclamation at the end of that because I want you guys to remember it's got to be strong, right? It's got to be strong. In that situation, find that new channel off the highs, draw off that low, right? Or back down to buy off of, right? To buy off of that low, right? Really, really simple strategy. You just got to wait for the reversal. And if we get the reversal, you know where we're going? Yep, we're going back into that range, that same range. I told you, just when I think I'm out, they pull me back in, right? We could end up back in that range. It looks almost impossible right now, but who knows, man? 3rd week of August, yeah, anything can happen. It's not just 3rd week of August, right? It's any day, anything can happen, right? So that's why we always try to keep an open mind. All right, let's keep going. How about some euro? Wrapping up tonight here on that euro. Euro's a little bit difficult tonight. Euro is definitely probably the hardest of all the markets. You can see got that little trend line in the way there, right? So euro's bearish. We had a channel, a trading range, a measured move, and a support trend line on the chart this evening. The channel tells me the bears have control, right? I want to sell high, right? That bear channel, that gives me direction, right? Bear channel tells me bears have control. The wind is at the back of the bears, right? But a recent double bottom in a bear market tells you what? Trading range. Right? We're going sideways now with a range, which is fine. There's nothing wrong with a range, right? But now I've got to shift my focus from selling retracements or selling pullbacks to now selling with buyer failures up above the high of that range, right? So instead of selling pullbacks, as the market goes lower, right, selling pullbacks, when we double bottom here now, hold on, different strategy, right? In fact, you can see, once we got that double bottom here, you can see nobody was there to sell the next pullback. Nobody was trying to get that pullback, right? Because they know better. It's a trading range now, okay? And then where do they look to sell? They find the highest point between these two. And again, you'll learn this trick in the free course, right, in the description. We go up, one try, two try, failure, back down, right, into that range. So we know we got a range here. We know sellers are selling high above that range. The big clue, the big kind of variable is this rising support trend line, which warns me not to sell too low. You'll notice here, connect those dots, right? This support trend line is a big deal, right? It's a big deal. In fact, one of the things you'll learn about in my intermediate course is that anytime I have 3 tests of a trend line, you got to take it seriously. You have to take it seriously. 1 test, 2 tests, okay. But 3 tests, usually 3 anchors in a trend line, big deal, right? You're not going to want to trade through it. Basically, when I see that trend line, I've got 2 options. I either have to get up, so I have some free space, right, up here. I got to get some free space, right, some open space for some profit, or I've got to get through it, right, through it, and use it as resistance. Now, I don't really like the idea of going through it because you can see where you're going to be, right in the middle. And we know that mama says, don't fiddle with the middle, JJ, right? Don't fiddle with the middle, stay away from the middle, right? So I want to get up here. I want to get up, 1 try, right? 2 try, failure. Now, this is where that trend line is going to come in and wreak some havoc here, right? New channel. This is where I've got to be careful. Right? That sell right there. That's going to be a tricky one. That's the one now that if I can get below that trend line, you see what we're doing right here? You smelling that? Yeah, see? Failure, wait for it, use it now on the opposite side. I can get down with that. That will work because I'm not selling the middle. I'm not trading the middle. Remember, the middle is just, the problem with the middle is that you've got sellers selling high, you've got buyers buying low, there's nobody in the middle. And it kind of creates this kind of vacuum effect where the price just kind of sits there and gets kind of pushed around here and there. It's almost like being outer space, right? With those zero gravity chambers where you can push somebody with only a feather, right? That's what happens. It's very easy to manipulate when it's in the middle of those ranges, right? So 1 try, 2 try, and again, this is repeating a lot of this. Failure, strength, but again, then get below it. Right? And remember, when you're selling off that high, right, you want to make sure you know where that trend line is. Okay, it's going to be different when we get there. It won't be the same distance as it is right now. And then once we get below it, remember, stay focused, sell on the top of that range. Right? I don't want to do it here. I don't want to do it here. Okay, that's not going to be a very reliable trade. Right? Now, again, don't forget we're bearish overall. I can do the failure thing off the highs, but the failure thing, the 2 try failure off the lows, no thanks. Let's wait for the move up. Let's find that new channel, right? And let's buy off the low of that channel. And guys, if you're a relatively new trader, or if you've got only 1 contract you're trading, a small account, or if you're, coming off a nasty losing streak, there are certain situations where let's just follow the trend. It's okay if you don't take everything. It really is. In fact, one of the best things that ever happened to my trading career was I just said, you know what? I'm going to identify the most reliable trading opportunities, and that's all I'm going to trade today, right? And then ask someone to hold you accountable. Yes, you could buy off that low. Yes, you could trade breakouts. Yes, there's all kinds of things you could do. But remember, what makes trading so difficult is that we need to think in probabilities. So think about the direction momentum, follow that direction. Okay, again, if you're on a 1 contract account, if you're coming off a bad losing streak, and you're kind of beat up with confidence, right? Or if you're if you're a relatively new trader looking for the best bang for the buck, you hate losses, whatever the case may be, there's no need for you to buy against that trend. But if you're an experienced trader, if you know what you're doing, if you know how to handle your emotions, don't be afraid to take a little bit of risk every once in a while, because there are great rewards for folks who are willing, right, to be against that. To be against the trend. It's not for everybody. It isn't for everybody, right? Not for the weak of heart, right, or the weak of discipline, but make sure, right, you follow that trend if you want the best results. All right, guys, speaking of the best results, as I mentioned earlier, I help ordinary people become extraordinary traders here at School of Trade. I've got one of the best free trials in the business. I've got a free trading course linked in the description. It's also in the upper right-hand corner. You can learn more about our beginner, intermediate, and advanced classes right on our website. You can, pardon my ugly mug, you can call that toll-free number anytime you want. I will answer the phone. I'm always here on live support. So many ways to reach out and get information. I know that Google and the interwebs are littered with incorrect trading advice, right? I want to be that kind of lighthouse for you, where you can trust the information you get from me, right? We do it every day in our trade room, and I would love to welcome you in as a brand new client. Test drive it as part of that free trial. Grab that beginner course to get started. Give me a call anytime you got them. Guys, I'll be back tomorrow morning, 8 o'clock Eastern time, right? Same time, same place in our trade room with all of our advanced members. If not tomorrow morning, if I don't see you guys tomorrow, come back and join me again tomorrow afternoon on the newsletter before 7:30 Eastern time. Guys, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.